Yes. Okay. All right, everybody. Yes. You can tell it's Friday. The Civil War veterans a little, a little bit drained, but gosh, TGIF, everyone. Hi, how are you, Craig? And NFP Day. You know what I think of NFP? No frickin' problem. Okay, we'll handle it. I wanted to start off with the flight to safety trade that CNBC was talking about last week. Last week when the Dow was down, S&Ps were down, NASDAQ was outperforming, and they were saying the people were buying FANG stocks because they were a flight to safety, which is something I've never heard of in my career. Flight to safety. Quality is cash, it's T-bills, it's bonds, it's short, it's a lot of things, but it's not buying Amazon, buying Netflix. Anyway, look at this candle. This is your weekly candle. A lot's going to depend on the NFP. My guess is the market's not going to like a great NFP because right now they think it's the problem is interest rates and yields on the 10-year. But, you know, if it comes in weaker, I guess that would say maybe the Fed would put the Fed on hold, but it would also have some things to say that maybe the economy has problems and maybe inverting the yield curve, which has started to steepen a little bit this week, could happen. Anyway, pretty negative action no matter how you look at it. You made new highs for the week. Took out the high of the move. Previous high was 76.90. This week's high was 77.02. We've taken out last week's low of 74.46 with a low so far of 74.32. So a classic key would close under last Friday's close. We're well under the 2-week off number. I also talked about the S&Ps that for it to close under the weekly off number wouldn't be much of an issue because it came in at 29, came in at 29.29. We're at 29.03. S&Ps didn't quite make a new high. The high was 42 this week. The high was 40.40. But as you can see, it's an outside candle. So we'll see how everything closes after the NFP. Dollar-wise, some people were tweeting me potential 3 drives in the euro. I don't know why this keeps happening. They're looking at something like this, counting this as 1, 2, and looking for one more under 14.5. But you know, why couldn't it have been 1, 2, 3? So even when you're trading 3 drives, there is some discretionary trading. You try and filter it out with the RSI. Probably would be better if there was one more low because, you know, part of what I teach is I filter out things by I need certain types of RSI readings to give it a higher probability of happening. But, you know, there's no reason that we can't start this bear market rally that Greg thought was a possibility when he was here with us. What a great week we had, Andre and Greg. We've had some excellent guests. I'm telling you that I've been in the business for a while. Okay, you guys know I'm one of those battle-scarred veterans, and every man who's been knocking around in the, you know, minor leagues most of his career with a little time in the bigs, and you know, maybe I struck out in the bigs and was sent back down to the minors. But this webinar, and I've done, you know, quite a few things over the years, the strength of what we do and that we give it away is really a testament to planting good seeds. So we're planting good seeds with you, and we're watering the seeds and the plant, you know, waiting for you guys to sprout. Many of you already are landowners. Those of you that are just learning how to farm pips. All right. I really think that it's a great idea to skip the trial, but at the minimum, try the trial and put our team on your side for what's going to be some real wild action into the midterms. If you think things are going to be quiet into the midterms and even after, the markets, I don't think will get sleepy until Thanksgiving. Remember, Thanksgiving, the Bears feast on Thanksgiving, the Bulls feast on Christmas. So we'll see how that works out this year. But consider joining. You get this 24/7, 24/6 analysis. You get it pushed to you. We're the best outfit on the net. Okay, you find a stronger team, let me know. I haven't been able to. And, we all in the business have a tendency to want to check out what else is out there. But you're not going to find much better of a team here at all. And the technology is outstanding. You have your dashboard here. And I know everyone's anxious about trading the NFP. I also want to mention our sponsor who makes this free webinar for you possible. Appreciate you guys calling Trent and Justin and talking to them about your trading situation. Maybe you need a new broker. We all get comfortable and don't want to make change even though we're complaining about something. So if you hear yourself complaining about something with your broker, take the time to introduce yourself to the guys at Forex FX. Tell them Blake, Dale, Steve, and everyone else sent you. Okay, so we'll get back to the markets. I'm looking to react. If someone put a gun to my head, I would probably, if we have a real strong number, maybe look for a scalp to fade dollar strength. But we'll see. I may do nothing. So the gold, I'll wrap it with the metals. So you had a strong dollar. So I think this is the second week running, and a lot of people thought gold could, get crushed one more time, but they're setting it up to really squeeze. Here it is. The bears. Okay, the bears are going to start getting squeezed over 1208, right around here. What's this high? 1212, 1211, 1214. So you just draw a straight line across this resistance level here. I'll do it. Just right here. And this is where the bears are going to have a hard time defending because it measures 55 bucks, right? Let's see, 1160. Yeah, 45. So that's going to take you up to 1260 or so. All right. So keep an eye on that. I'd love another opportunity to buy them, a break. Let's see what happens there. They may be the better fade since on a weekly basis now in gold, you have an up week this week, right? Last week was not an up week. And in silver, you've had consecutive up weeks. Silver's actually shown more relative weakness this week than gold, but it led the way. So I'll be stalking the metals on weakness, whether it's today or next week. I still don't think it's over. I think we have higher levels, and also think that the dollar may come off now that everyone's convinced we're going to take out 97. So with that being said, I'll turn it over to one of the best traders I know, Blake Morrow, who yesterday was showing Wile E. Coyote getting ready for the ledge to crack. I would say, based upon what I see, Blake, that Wiley is only about a third of the way down to the bottom of the canyon. I just blocked him too. All right. So that's, how are you, Blake? How you doing today? I see your screen. When will there be the India market webinars? Okay. Blake, are you around? Can I?
Sorry, I was sitting here talking. I thought I muted myself, but I actually did something else.
Oh, okay.
So I did exactly what you did earlier. I was sitting there talking to you, and you didn't hear one word that I said. How you doing?
Good, buddy. Glad it's Friday. Looking forward to the NFP. What are you thinking here with the market? I'm talking about indexes and, great call on the Wile E. Coyote. To me, it looks like, it's just starting and he is maybe, Wiley a quarter or
Yeah, we got a little squirrely yesterday. The S&P started to break down. We did get the Wile E. Coyote action, but it is
recovered.
It recovered a little bit, but I'll just say what you said. The feast and Bears feast in November, and Bulls. What do they do in December?
The Bulls feast. The Bears feast on Thanksgiving, and the Bulls feast on Christmas.
Okay. And I was actually talking to a really good friend of mine last night, and he short some of these FANG stocks, and I'm like, you're probably good until November. You can probably stay short some of these, and we should have a little bit of a correction. Because he's a friend of mine, not an actual trader. He's in the real estate market, and he has puts. And I'm like, okay, well, those are probably fine. You probably want to cover them up after you see a few percent correction. I mean, you look at some of these NASDAQ stocks, and they do look like they're going to correct. I mean, and the NASDAQ cracked pretty key trend line. I mean, we could probably see 7,000. Well, it was that 5-6% correction from here. 200-day moving average is at 7,000 as well on the NASDAQ 100. So, I mean, that's all doable. I don't think it's not doable.
Yeah, it would be equal to the break that we had at the beginning of the year. They're about 800 points or so.
Yeah,
that's what we had. Two of them we had back in January and February. So that was the magnitude. So similar magnitude takes it right back to your channel. Nice look. I like it.
Yeah, and it's interesting. I'm actually short the S&P and NASDAQ myself, and I've got no FX going right now, so which is weird, which is not normal.
Wherever the action is, buddy.
Yeah, well, okay, so let's talk about today. So today it's non-farm payroll day, and the guys in my office, if you don't know, I trade for Gellos Capital, which is they're out of Greenwich, Connecticut. It's small group of very elite traders. These guys have been together for 20 years plus. I'm like the newcomer. The previous newcomer to me has like been 10 years ago or something like that. So and it's great. It's a wonderful group with just a few traders to be associated with. They're extremely intelligent, and they're all, but they're I guess the point I'm going to try to make here is they're kind of not really too sure what's going to happen today either. Usually you can go into non-farm payroll and have a pretty good idea, but generally speaking, we're looking at potentially some weaker numbers today, and the question is going to be the average hourly earnings, and that's this is the number that we all got to pay attention to, is the average hourly earnings right here. This is via Bloomberg, so you have to excuse me. Right here, these two numbers, 0.3%, 2.8%. Those are the real big numbers. We are at what should be considered at full employment. So, the job rate, and where's the actual number here? There, 180,000. That's what the market's looking for via Bloomberg survey, right? So 180,000, and you may see it reported. I don't know what Forex Factory is showing, 185,000, but this is via my Bloomberg terminal. So you're looking for 180,000. We might create 150,000. It may be a little bit light, but how's the market going to respond? Because you've got the dollar has been here. I'll put that back in a little bit when we're getting closer to data. The dollar has been really pretty strong the whole week. So, you know, do you really want to short the euro if we have a weak number? You know, stocks are looking weak right now. The stock market's looking, you know, it's kind of rolling over at the moment, but you know, which may in turn, if the stock market continues to roll over, it might affect the euro yen. But I think probably the cleaner trade is shorting the dollar yen. But then the problem with that, in my opinion, is you got yields that continue to scream higher. I mean, look, yields are holding a breakout. You know, if you look at this bull flag pattern that we had in yields, we still stretched to 335 on the 10-year, and I mean, here's the where is it? Let me go find it. Here it is. It's down here. Where is it? Oh, this is Joe's list. I'm like, what? It's not my list. Okay, so where am I? Here's the 10-year. Here's the bond market. So we have 127% extension, which may be touched. And again, if bonds continue to go down, yields go up. Do you really want to short the dollar yen? I'm not sure. And this is where like the confusion lies. So I don't know, and I have zero currency positions on at the moment. So I guess what I'm trying to say here is I'm not really too sure what to do either. And if I look at the euro dollar, if we have a weak number, do I really want to be long euros? I think Italy is still an issue. So perhaps selling the euro on some sort of rally, it might be the better trade. But I don't know if let's think about that for a second. If the euro, and I'm just going to do a little bit of drawing for you guys. Let's say the euro spikes up to 1550. All right. Following the number, we get to move up to 1550. Well, then you're going to close the week with a hammer. So with a hammer candle, meaning a bullish daily candle. So do you really want to be short the euro going into the weekend, a long weekend at that? Well, it's Columbus Day. I mean, the stock market will be open on Monday, but and we'll be broadcasting here. I'm just saying, but the bond markets will be closed. Some of the markets will be closed. But do you really want to be short the euro going into the weekend if you have a nice reversal candle going the other direction after a week of a beatdown? And really, what's ultimately probably a range. And you know, we were looking at Andre's charts yesterday. I mean, this could still be, even though we dip below this other shoulder here, this could still be an inverted head and shoulder pattern. So I'm not really keen on getting aggressively short the euro just yet. You know, I think the risks of the euro going lower over time is high. You know, I think that I really don't think this inverted head and shoulder pattern is going to play out. I personally don't, but that doesn't mean it's not going to. I mean, we have here. Let me do this. If we're building this, shoulder. Let's do this. If technically we're building something like this, I mean, you know, we could sit and bounce around for the next month, just building out this shoulder, and then eventually break down. Because I do think the Italian concerns are really a big concern. I think that with yields going higher, especially if European bonds dump and yields go up, how is Italy going to service its debt? You know, they have all these projections of, oh yeah, we're going to meet budget deficits, and you know, you know, they have all these projections, but you can throw those projections out the door if bonds really dump. Like if you see boons to you know, reverse and all European bonds just start selling off and yields rising, how is Italy going to service its debt? They're not going to. So then you got a real big problem with the euro moving forward. So I'm not a big believer that the euro is going higher longer term with yields rallying globally, right? That's to me the biggest issue. But that has nothing to do, well, it maybe has a little bit to do with today, but it really has nothing to do with like what's immediately in front of us. And so that's why I'm not convinced. Now, if the number is strong, And because we haven't even talked about that scenario, let's say we have a strong number, and let's say non-farm payrolls, register a 210 number, right? So we beat expectations, and then average hourly earnings step up. Let's say month over month we're at 0.4%, year over year we're at 2.8%, and inflation looks like it's really creeping in, like for real. Yields are going to fly, the dollar's going to rip, and that euro is probably going to break down. So that's an easy play for me, like if we have a strong piece of data. But if we don't, I'm not really too sure what to do. If the data is weak, I guess we just short the dollar yen, perhaps, but I'd like to see how stocks react. So I don't think it's as clean as normally it would be. And so it is a little tricky. Now, one of the other things that we should talk about is the dollar Canadian. Now, because we have Canadian jobs report, and we have U.S. jobs report at the same time. Now, I played the dollar Canadian to the long side this week. We were down here. I figured we were going to do a gap fill. I didn't trade it as well as I wanted to, but I did make a really nice chunk of change, buying it at 40 and selling it at like 70 or whatever I did 2 days ago. I wasn't yesterday, it was Wednesday. So on Wednesday, I picked up the dollar Canadian, a pretty large position, and I rode it all the way up until we got to this previous support. So I think I sold it at like 77.
82, Blake. 82 you sold it at. Yeah, I remember your trades better than
you probably do. I do a lot of trades. So I made it, but I was in a really aggressive position, more aggressive than I normally get, which is fine, especially when I'm trading counter trend. And then yesterday I figured we were going to fill the gap. We did, and I traded it a little bit. But we were talking about this in the chat room just earlier this morning. I actually would love to play the dollar Canadian on the short side. I would. However, I don't want to do it right now. And Nidish was in the chat room saying, well, everybody's trying to short the dollar Canadian because the Bank of Canada is going to be strong, or going to be more hawkish, and the data is probably going to be good, so everyone wants to short it. And I get the reasons why they want to short it. I just don't think the price is right yet. I personally, I'd like to short the dollar Canadian somewhere closer to here, which would be like the 50% retracement. The longer term, let me get rid of this smaller fib. I'd like to be a seller up here, around 130. This would be like my ultimate price to be short. So, and then plus, look at stocks. Stocks are a little risk averse. We get, stocks are a little risk averse. The risks of a bounce in hold on really quick. The risk of a bounce, is
bonds?
No, the bounce in the equity markets, because I'm sorry, the bounce in the dollar Canadian, because people don't want to be short the long the Canadian dollar when you got a little bit of risk aversion. The dollar Canadian actually mirrors volatility pretty good. So if stocks continue to go down, the risk is that we start getting a move up in the dollar Canadian. So I would not want to be short the dollar Canadian if the stock market is in sell mode, personally. So seems
to be going into the number. They're pressuring equities right now, Blake.
They are pushing them down a little bit, and the dollar Canadian's a little indifferent. But I'm just going to reiterate, I'd rather be a seller up here. I don't think it's an easy trade where we're at. I think, I always tell you that, before a big number, we end up being middle of the range. Well, guess what? We are in the middle of the range, dollar Canadian. Lower end of the range, upper end of the range, we're pretty much in the middle. So I'd rather be a seller up here somewhere, not necessarily where we're at. So I don't know what to do today. And the good news for you guys is I'm going to be here for non-farm payroll. I'm not going anywhere. So I'll be here for it. And by the way, the dollar is seeing a little bit of pressure we're seeing the euro push up a little bit. And one of the other things, I want to point out really quick before we have these jobs data, and I don't know if Stelios is here, or I don't even know if Steve's going to be here.
I am here. Good morning.
You are. Good morning. How's it going?
I'm very good. Very good. Thank you. I have a chart to show afterwards on the 10-year, but carry on.
Do you want to show it before the data or after the data?
No. After the data is.
Oh, you want to make sure you're right, then show the data. I got it. You're gonna give me weatherman analysis. No, of course I was showing you that it was gonna be sunny and rainy. Just kidding. Okay. One of the things that I'm really actually watching here is precious metals, because silver's trying to base, gold is trying to base. If for some reason we break above 1 or 12.13 in gold, which it might happen today, who knows? But if we do, I'll probably really drop everything and just start shorting dollars, and probably more just shorting the dollar yen. Actually, is probably what I will do. But I don't know. Maybe the number is so weak that gold spikes up above this resistance. So that's something that I'm paying really close attention to today. And you'll notice this moving average. Okay, this moving average right here is the 48 EMA. It's a moving average that was made very popular by one of our traders who unfortunately is sick, and we're all hoping him well. His name is Ron, and Dale did an interview with the captain. We call him Captain, and you'll notice it stays on my chart pretty much as a permanent fixture now. But notice how the 48 EMA has held gold, capped it like a champion. Yeah. So
that's a pearl from the captain.
I'll tell you what.
So do you use that? You use that on every instrument, Blake? 48.
I keep it on my charts full time now. I keep it on my charts full time. Yeah. So
see how one person can change and give people a powerful tool.
Yes.
By collaborating and being part of a community. I think that's a testament to communities.
Yeah. But definitely, and he is. We really hope him the best and wish him the best, and I hope we hear from him soon. We haven't heard from him or his wife in a little bit. So hey, we've got the data's coming out here. I'm gonna grab this Bloomberg terminal so you guys can see this. Initially, I was looking at a little maybe Gartley. If for some reason the number is stronger, we might see the dollar yen spike up to 114.20. But that's just something I was kind of messing around with. I didn't share it with anybody. I was just kind of keeping it there. But let's focus on the data that's coming out right now. Here we go. Oh gosh, how much time do we got?
A minute.
40 some odd seconds, huh? Less than a minute. All right, Coach, whatever you say.
Good opportunity for me to say good morning then.
Hey Steve, good morning, welcome.
I'm here, Blake. If you need to go, I'm here, mate. I'm here. If you
it's too late now. I'm here, so.
Okay.
So
hey,
watch this data right here. And
the hourly earnings.
Right here. Yep, hourly earnings, these two, and then this one. If you're watching US data, then Canadian data is still there as well too.
Boom.
It's weak. Boom, weak. 121,000 hourly earnings came in line.
Guys, very big revision though, from 201 to 270K. So that
is a pretty good revision.
Yeah, indeed.
So that kind of washes it. It's bringing stock indexes back.
Wow, look at the stock market. It's just spiking higher. So, hold on.
The bonds should probably be rallying pretty good here too. And Greg had talked about a potential, but Greg had talked about a potential low in the bonds that we were close to completing it. That was part of a scenario for a euro rally. So euro rallying pretty good.
Weak hourly earnings in Canada. If you notice, there was the survey was expecting 2.6. we got an actual of 2.2, so that's quite a miss there.
On the other hand, the employment numbers, which is the big one, was much stronger, 60 something K versus 25K expected. So I think the Canadian data is probably overall balances out.
Look at the qualitative data. The full-time employment change was negative while it was expected positive. And what was the big surprise was the huge spike in part-time employment. So if you look at the quality of the data, it's not actually that good because full-time jobs were lost instead of gained.
Absolutely right, and it's actually a phenomenon, a global phenomenon now, right? In Western countries.
Yeah, absolutely.
Well, hey, Steve, I'm going to pass it over to you guys. I'm actually looking to fade this rally, so I'm actually shorting some U.S. dollar or euro yen here. And I'm going to fade this little rally and risk as it's coming in. So thanks, guys, for being here. Steve, I'm glad you're back, and I got to get to trading.
Thanks, Blake.
All right, have a great weekend, Blake. Good hunting.
Thanks, TGIF. Thanks, guys.
Steve, before you start, can I take the screen for 1 second? I just want to show a chart which I think is quite interesting, if that's okay with you.
The metals like the number. Go ahead, buddy. I'm curious to see it. Zap.
Here we go. So this is a 10-year. Forget about the scale here. You know it's a yield, but it's multiplied by 10 for some reason. So it's 3.197. So this is a 10-year yield, and this is continuing to what Blake was talking about, the 10 years. He looks at the short-term charts. This is a monthly chart, and look at this 30-year channel. I mean, and it has been going really, really well. And now it's breaking out, but something which I think
What's the purple line?
That's the 200 moving average. So
200 month.
Yeah, it's but the important thing here is to look at is this. It looks like it's a breakout. Okay, it's pretty clear. It's touching now the moving average. I was going to say
321 less.
Yes, and I was going to say that if you look at positioning and sentiment, it is very, very bearish. Like DSI, I think was almost the single digits, and positioning, I think, is record short in 10 years. So if something happens, maybe this wasn't the weak data that could have really pushed it, but if something happens and we suddenly start pricing less from the Fed, or something global happens and risk, not risk on, but I'm talking about geopolitical risk starts going up, then you're going to see yields coming down. And just imagine what's going to happen if this little breakout goes back into the channel and it becomes a false breakout. Then you have all these record shorts trying to get out. And I think it's gonna, I wouldn't be surprised if this thing, if it started going down, yield started going down, below this channel, this top line, I think it could easily go back down to something like 2%, which I know sounds crazy, but it could easily do that.
My candidate would be like a 10% sell-off in equities, risk off, would do it.
Yeah, potentially, yeah.
Yeah, I mean, to me, the charts are telling me that's could happen here. So
on the other hand, guys, don't forget that there is a legitimate reason that we're seeing yields go up, and is the sentiment and indexes like momentum indexes like the DSI very often point to to a specific time and place in the market that there is an increased risk of having some kind of a reversal. The answer is absolutely. Now the question though is, does that mean that we will completely reverse what we're seeing here, or that likely we're just going to see, let's say, some kind of a correction? Because we also need to take into account things if we're talking about the yields that, for example, last week was the first week in many years that during the whole week the 10-year treasuries were trading above 3%. We haven't had that in many years. Trading above 3%, for the whole week. The 5-year yield hit the highs that we had in 2009 or whatever it is. So I think, Stelio, that we need to respect this as a legitimate breakout as well, until proven otherwise, of course. Right?
Yes.
Boy, Boy, I miss your commentary, Volgi. Great to have you back.
Steve, I agree with you. You know, there is a legitimate reason why yields are going higher. You know, inflation is going up everywhere. So there is a legitimate reason. All I'm saying is that if we do see a correction, it could be deeper than, you know, than normal because of this positioning, because of the way it's been looked at by everybody. You know, this is a breakout. End of story. We're going to, you know, 5%. You know, it couldn't. I think eventually we're going to higher yields. I think there's no doubt about it. But I think if there is a correction, it might be a little bit deeper than expected.
No, that's a very valid point. And if you're asking me, I'm afraid that longer term we might be going to a lot higher yields than the vast majority expect. A lot higher. I mean, people have completely dismissed the possibility that we're going to see a period of stagflation again. I mean, central banks don't even stress test for that anymore. And, you know, that's, in my opinion, ignoring that possibility is a huge omission, at the very least, a huge omission.
Absolutely. And I do agree with Dale as well. You know, higher yields theoretically should push equities lower. We should see a correction because we
because for the simple reason, I mean, you don't need to be an economist to understand that. For the simple reason that it's a matter also of you know, opportunity cost. Yeah, that's how it's called. Yeah, opportunity cost. Because you know, stocks have a specific yield through, you know, dividends, and now bonds have surpassed that already. And given the fact that the valuations are very extreme in many sectors, especially, you know, the potential of switching to some bonds instead of you know, having the risk of stocks becomes you know, even more appealing. And yeah, obviously higher yields will and should eventually put more pressure to stocks. There's no question about it.
Steve, I'm passing you the screen, okay?
Yeah, thank you, Stella.
So that's what I wanted to do. Yeah.
Thank you very much, Stella. So we can, you know, we have several stuff we can have a look at. Blake said that he was looking for a reversal in he's pushing the lows. If you remember, and Blake had also written a very nice blog post. I pointed to that several days ago. If you remember, we were looking at this intermittent ascending trend line within this channel. That was the first critical area of support. We've already broken below that. So, you know, the key level now is the 2870. I mean, the next key level is this 2870. And, you know, if we go below that, then we will be talking about testing the channel and the channel support. And I do believe.
Steve, are you on your Wi-Fi?
We see a lot more downside. Yeah, give me a second. Sorry, I'm going to switch. Yeah.
No problem. Okay.
Yeah, I'm switching. Yeah.
And there you see a Greek website about sports. So what's the market doing actually? Not doing that much. Interesting. Stocks didn't like it. They've turned negative. Okay.
Flight to safety in the fangs, man.
Yeah. I mean, that was.
I knew it was almost over when I heard that. When people said, "Oh, people are moving, they're rotating to the fangs."
I didn't actually read that.
There you go. Yeah.
Okay.
I was going to ask Steve. When's Jason going to be 3?
Yeah. What about that? No.
Well,
he's actually 2.5 tomorrow.
Oh, okay. So you have 6 months to do what Fred Trump did for Donald Trump, because, you know, Donald Trump made $200K according to the New York Times as a 3-year-old.
Doing what?
Okay.
I'm really curious.
Being Fred Trump's son. Just being his son, okay? You know, that way you don't have to pay a big estate tax. But yeah, he was making $200K. I don't know, maybe because he learned to use the potty. and he was paid that amount. He was a millionaire by 13. So anyway, you have some time to start feeding Jason's bank account.
Okay, I'm seriously
All right, buddy. I don't want to put any pressure on you now. I'm just saying, if you want to be like the president's father, you better get going. That's all I'm saying.
So having to do with the Nasdaq, you can see my screen again, Dale.
Yeah, I got you, buddy.
Yes.
Nice
yes.
wedge
Okay.
breakdown.
So
yeah.
Nasdaq, nice wedge. Not only that, look at this little false break higher intraday, false break higher, and
Not
look at
fun.
the huge divergence that we had in the RSI. I mean, at the second high, the RSI was barely above 60. Not only just below 70, but barely above 60. Right? So false break
What's your
higher
target,
intraday, reversal. We're now probing the area below the wedge. We already saw some previous lows roughly at this area at around 7,400 if you're using the specific instrument, the NAS 100. And I have to say that especially if we get a move below there, I really see no area of support until we get to this horizontal area at 7180. So, I mean, between here, if we actually do close the day below the ascending wedge support, and, you know, the first, let's say, legitimate target as a first target, you know, we have a decent distance to cover by then. And if we actually also break below there, I think that, you know, that more or less solidifies the technical move out of this wedge. And, you know, we might get what you, from theory, get for wedges, which is a retracement to the bottom, to the beginning of this formation. And obviously, if that happens, we're talking about like a big move lower. I mean, in this case, from here to the first area of support, that's 3.5% roughly. And then down to the beginning of the wedge, we're talking about roughly 15% of a move, right? So it's
that would rally the bonds.
Oh yeah, there's no question about it.
Yeah.
And you know something, the canary in the coal mine, and I wanted to talk about that.
You called the high, bro. You called the 7280 was your target when we were moving sideways before the last move up. I think the high was 330. But you know, that was a great call on Russell because the rest of the market kept going, and Russell, and you know, I talked about that false breakout. Yeah. That was a good one.
That was the canary in the coal mine, and you know, it seems that Russell is definitely going to make it back to this previous area of resistance that was keeping price action, you know, in this previous triangle. It's just above 160, 160.40 to be exact. I think we're going to make it there, and you know, so far so good. But if we actually do break below that as well, that opens up a lot more downside for the Russell. So you know, that's another index I'm looking at. And at the same time, let's not forget what the VIX has been telling us. I mean, we've been talking about this big divergence. I mean, if you look at it, VIX had actually built for itself a different floor for a big period of time until the end of last year. And after seeing that spike that we got in the end of January, when we got that big sell-off, after that euphoria, that mania little phase that we had in January, you know, the VIX started like pulling back and having its usual risk-on behavior, but this time having built a totally different floor for itself. And that's something that, you know, we shouldn't ignore, we should notice. And actually, we're now seeing, you know, a little attempt to perhaps break out from this formation. So, you know, I'm monitoring all that at the same time because I think it's, you know, it's interesting and, you know, technically speaking, there is potential for more, for a bigger sell-off. DAX also got rejected. We were talking, actually, we were here in the webinar. When we were testing, perhaps the first or the second day, we were testing the 12,400 area. I said that that's quite a significant area in this rebound. And if we actually get rejected from there, we should go down to 12,100. Below that, it's the 11,800, and that's actually the neckline of this huge head and shoulders formation. So, you know, I wouldn't want to be somebody holding long positions in the DAX if we actually do break below that. the FTSE, despite generally seeing weakness in the cable, is once again unable to push to higher levels. Obviously, the last 2 days that we had some strength, acted as a headwind as well. Don't forget that support remains in this zone, like 7,300. But so far, we don't have confirmation that this move lower is done. So, I still see the potential that this move lower might be some kind of a complex correction. But is it over yet? No, it actually isn't over. So I wouldn't even rule out a push to a new low towards 7,100. Now, the Nikkei, on the other hand, after trading for a few days above, like, I think 20-something-year-old high, 27-year-old high, something, something very solid. We got that big move lower, and if you remember, we had actually warned. I remember writing it on the chat room as well, that I thought that USD yen was due for a move lower. We started like a couple of days ago. Then I think that the move that we saw the day before yesterday is very likely more give us a correction at 113.17 is the first natural area of support, but I wouldn't be surprised if I saw lower levels than that. To do with metals, because I think that all the metals are at quite important junctures. First of all, copper, so far, this looks to me like a corrective move. So I would have to say that I still believe that there is a good chance that we're going to see one more leg higher to retest the previous area of support at 294. So I think that copper might eventually push at least once more higher before likely seeing lower prices. Gold, I think Blake showed that, and I'm 100% in agreement with that. Gold is retesting once again a resistance. I think that if we actually clear that resistance to the upside, if only it loaded, would be nice. Let me see. Stelio, can you hear me? Fine.
Yes, you were lagging a little bit, but now you're okay. You were lagging a little bit, but now you're okay. Can you hear me? Can you hear me now?
Okay, sorry. I'm on 4G. I don't know what else to.
Okay.
Yeah.
No, you're okay now. You're okay. You have a lag though. Yeah.
Okay, here we go. Finally. Okay. Gold. I'm watching at this resistance. I think that if we actually clear this resistance on a daily closing level, I think it's roughly at the moment, let's say 1208. I think that's a signal that we're headed to 1238. I'm still holding my long, by the way. Silver. If you remember, I had drawn that in case that we finally close above the 1430, 1440 area, I think that there is no real area of resistance until we actually test 1520. And this remains to be the case. I think there's a good chance that silver is going to at least retest 1520. Now, on the other hand, we have palladium. Let's see platinum first. Platinum correcting in an ascending channel. So far, I have to say that I'm not seeing any impulsive characteristics, but still we are within a correction. And on the other hand, I want to show palladium finally decided to pull back. Personally, I believe that the chances that this pullback is corrective are extremely high. But on the other hand, I believe, as you see, so far today is the fourth consecutive day that palladium is consolidating within a tight range. I don't believe that the corrective move lower that we would be looking for after such, such a strong move higher is done just by two bearish candles and a little bit of a consolidation. So my bias is that we will most probably get at least one more move lower from palladium before producing a nice opportunity to buy it. So I think that this previous high at 10.25 is, you know, the first target for another leg lower, but I wouldn't even rule out a retest of the 1,000 area. So as I said before, I think that one more leg lower for palladium is a very, very high probability scenario. But after that, I think it would be a great opportunity to buy it because the move higher is clearly impulsive in all its characteristics. And if we want to take it a step further, the whole move lower was clearly also corrective. I mean, choppy, slow price action. We didn't retrace that much of the initial move. The initial move higher was impulsive, and this recovery seems to be having impulsive characteristics as well. So, you know, another dip lower, probably a good buying opportunity than anything else. Stelio, do you want to help me a little bit with questions?
No, I'm kidding. Okay, let's have a look what we got. We have Gregory is asking for euro sterling. I don't think we've covered that today, have we?
Oh yeah, actually no, we didn't. There it is. Euro sterling. I obviously got stopped out. You know, good thing that was, you know, a very tight risk reward trade. I had like a 40 pip stop loss there. You know, I was hoping for a nice rebound from here because, as I said, from a technical perspective, that was a very nice trade because we were retesting a breakout level, a horizontal support resistance area. So it was worth the risk. It didn't work out. The fact that we are now back within this range is definitely not good news for the bulls, right? From a technical perspective, although, you know, it's not improbable that this is a corrective move lower, but I have to say that when you actually get a breakout after so many months, and this breakout fails rather soon, you know, very often that's a very, very strong signal that the market will move quite a lot in the opposite direction. So I would definitely not be trying to buy the euro pound again. And I do believe that the opposite might be a good idea, meaning that any rebound towards this area that I leaned against as support the previous time, this 88.50, 88.60 area, I think that any retest of that area might be actually a very decent shorting opportunity with a good reward to risk ratio. Obviously, euro pound, if you have a look at it, even by zooming out, not the best proposition to be trading now that we're back in this old formation, because you know, it was a nice consolidation, a nice breakout. It could have been a nice retest and a move higher, but since that's not the case anymore, from a technical perspective, it's very, very, you know, hard to read what's coming up from here. But as I said, the fact that the bullish breakout got invalidated is usually quite a strong bearish signal. Okay. Other questions, Celia?
While we're here, our friend Dave is asking for sterling Aussie. Maybe we'll have a look at sterling Aussie, sterling Kiwi. What do you think?
Absolutely.
They've done very well last couple of days.
Okay, there we go. So, pound Aussie. Obviously, currently testing like a critical resistance area. You can see why. That was the previous high that we had. The move lower proved to be corrective. We actually found a low where you would want to see a low. I have to say that I was quite troubled by that long black candle that we had that day. But I remember saying on the webinar that listen, that's quite an important support area. So let's first give it some time to see what it does, because there is a good chance that this is a corrective move to the downside. And it proved to be so, because we're currently about to test the previous high. We almost went there actually, which wasn't even a closing high, right? It was an intraday high. So I have to say that, especially if we close above this resistance area, the next natural target is the 127% extension of this corrective move to the downside, which comes at 188.42. So I think that's quite clear. But since we mentioned that, let's have a look at the pound kiwi, because the pound kiwi is a very nice example of how you expect a formation like this symmetrical triangle to work out. I mean, it took a long time. Actually, this is the kind of behavior I was hoping that Euro pound would produce as well. Nice long-term formation. We came in that formation from the downside. So I expected that the chances of a break higher are, higher. We got that breakout. We came down, and despite coming down with momentum, which was a little bit scary, once we retested the breakout trend line, as you see, the pair immediately reversed, and we're currently pushing to new highs. So where would the next natural target be? I would have to say, I actually don't have it here, so we have to draw it, and I would have to say we have to take the maximum width here of the triangle. There we go, and extend. Okay, and let's extend this and see where the 127.2 and the 161.8 are. We don't need these retracements anymore, so let's see. We're already pushing through the 127% extension, so we're currently testing resistance. The next, the 141.4 can act as resistance on occasion, but I consider the best fib extension to be the 161.8. So 161.8 at 206, I would keep my eyes on that. So I think that if we do actually close above the 127.2, we should probably head there. Okay. And something we have 3 minutes. So Stelio, if we don't have any other questions, I would.
We do. I mean, we do have one more, but we can do whatever you want.
Tell me. Tell me. No, I just wanted to show that Euro Kiwi. We can cover the question as well. Let me go over that very fast. Euro Kiwi, clearly corrective move lower. A, B, C. Where did we find support? Previous area of resistance. You can see how clearly it acted twice as a resistance. This time it acted as support. The 50 daily moving average also was just below that. So clearly the uptrend remains. Where is the next area of interest? The 161.8% of that corrective move lower, which comes at 180.73. I'm going to go over the Euro Aussie as well very fast, and then we cover whatever the question is, so Dale can go on and start his interview.
Dollar reverse pretty good.
There we go. We're going to see it now. So Euro Aussie, corrective move lower, looks like a flag to me, and we're probing above the flag. Next target, the 127% extension of this corrective move lower at 164.40, and the next serious target after that, the 161.8 at 167.60. Now let me have a look at the board since you mentioned it. You said that the dollar reversed. Let me have a look, Dale. Yeah, dollar is definitely lower. We can see here. But by the way, the Euro USD, as you see, I haven't touched that at all since the last time I was in the webinar. That's why I like to, I like very much horizontal support resistance areas. You can see here why, because this area doesn't seem to have been support, at the very, very recent past, but it was very strong area of support resistance, some time ago, and it acted as support again. So watch out for Euro USD here, because I like the area from which it's currently rebounding, right? So Dale, who do we have today for an interview?
Norm Winsky and Greg Horvat talked about this potential in Euro here, where we could get this rally back to 119 or so. Anyway,
and you know something, I bet that a lot of people,
all the bulls are gone. Yeah.
Exactly. A lot of people got trapped being short below this 115.30 area, which was the previous low, because for a lot of people that was like a confirmation that, oh, now we're like posting lower lows, So that's it. You know, the euro is ready for another leg lower. So yeah, I do think that you know, there is a decent potential for a rebound from here. The market is definitely not well positioned.
And that may help equities a little bit, but if equities don't rally with the dollar weakening, they're really in trouble. So, Steve, it was great to have hear you, because when you're not around, it's definitely a hole that's not easy to fill. So you have a great weekend, and
everybody have a great weekend.
Yeah, I hope you have get some relief, Stelios, Blake, everybody. And I'm going to bring Norm on. Norm, you're about to take over our television, so that's like the outer limits. So I'm going to make you the presenter here. And interesting to see how last month worked out for you and what you see in the month ahead.
Hello? Hello, Dale?
Hello. Yeah, hi, Norm. How are you, buddy?
Okay. I've got like an echo.
Yeah, a little bit.
You want me to try to reconfigure this? Oh, that's crazy. Let me see. When I signed on to this thing, it was like,
oh, you know why?
Let me see if I can fix it.
Well, there's only one of you. Let me see if there's still another Norm.
Now, how about now?
You're still, yeah, you're still, let me go to attendees.
You want me to sign out and sign back in?
Norm, is there any chance that you're also signed in as a, or that either you're using speakers or you're also signed in like attendee, so you can actually hear yourself back? Is there any chance you've logged in twice to go to webinar?
Let's see if this handles it. Okay, go ahead, Norm.
Testing 1, 2, 3.
Okay, there go. I got rid of your other.
Yeah, that was it.
Yeah, because you logged in twice.
I was signed in twice, right?
Yeah, you're good now.
All right, so let me find out where you are now.
Okay, we see something Apollo chronology. So
well,
waiting for your stuff.
That's not the right page. There we go. There's where we're supposed to be. Can you see that now? Norm Winsky interview?
You got it. You got your notes up there. Everything. Okay.
Uh-oh. That went wrong.
Your initial.
Retry. Can you hear me anymore? Can you hear me?
I can hear you, Norm. Just waiting for your screen.
All right.
I can't turn
How about the screen? Can you see that screen
go
still
back.
now?
No, click it again. Okay, now we have it. Okay, everything's good. Volume's good. Everything's good. We have D-Scattle up there. Go ahead, buddy.
Thanks for fixing that. That was driving me just a little crazy, right?
All right, let me just tell people a little bit about Norm. Norm's been in the markets for decades. Used to be a member of the SIBO, used to trade down there on the floor. He's a great teacher, mentor, and his methodology is with the planets. And I've seen a lot of great turning point work from Norm. So go ahead, take it away now, buddy.
All righty, everybody. I hope you can see my notes. And here we go. What's that again? The reason it was sort of an accident. I said, Dale, what do you got available? And he said, how about, this is a couple months ago, he said, how about October 5th as it works out? October 5th and this coming weekend is my highest energy window for the entire month of October. So you've done a good job there, Dale, picking a good day.
Okay.
I don't know how
I think you requested it. You requested it, and you knew. You like to come in when the planets are, dancing with each other. So
right. Want to talk to the folks just ahead of some big action, otherwise they're not gonna, that's how.
Well, let me start with one thing before we go to your notes. So we've had a decent sell-off in the market, and it's been led by what used to be the strength, like the FANGs and NASDAQ 100. So if we're coming into this high energy window, are you looking for this sell-off to terminate into this window or accelerate?
That's the likely scenario, that we get to an extreme, Well, let me give the background. Build up to that. Right.
Okay, go ahead. Yeah.
So anyway, one of the things we have this afternoon. Well, I don't know if how many of your people are new. Have heard me before, but believe it or not, the planet's going to have a big correlation, influence, whatever you want to call it, on markets, on market trends. I forecast this stuff weeks in advance, and it works. I have about a 75% batting average. So if you're going to have a 75% batting average, I would suggest you take take this seriously. Now a lot of I would say most traders that I know out there, not my students, but in the general trading community, they're all price oriented. They're trying to predict the price to buy or sell at. You got your Fibonacci retracements, all that sort of thing, and they based on price. And let's say we have hypothetically, let's say the market has a big down, then it's coming back up, and everybody's got these trading platforms now with their Fibonacci retracement levels, and so the trading platform says, oh, you're at the 382 retracement, and then they go short and they put in a stop and they get stopped out, and then they go to the 50% retracement and they go short, they get stopped out, and then they go to 61% retracement and then they go short and they get stopped out. And I don't know if that sounds like you're trading or not, but I think that's kind of the general thing.
How about at 78.6 and 88.3?
Well,
they get stopped out there too?
Yeah, that's
and then they get long at new highs, and then they get long at new highs.
It's kind of stretching the point, Dale. The point is that what they're not considering is time. No market will turn before it's time. I don't know if your folks are familiar with Mr. Gann.
Yeah, Gann. Yeah.
WD Gann said that time was more important than price. Okay?
The tincture of time. Time heals all wounds.
There you go. So Mr. Gann considered, I think probably most people would say that know about him, say that Mr. Gann is the greatest market technician of the 20th century, and his main first and foremost thing was timing factors.
Ever hear of the band? Ever hear of the band called the Hands of Time?
Not really.
That was my band at junior high. I thought maybe might have heard about us.
No.
So at Old Orchard, we played in front of the whole school at Old Orchard Junior High.
All right, I missed that. It's one of my greatest regrets.
So I was into I was into time when I was 13, man, 12, 13.
Okay.
I didn't even know WD.
They probably came to your bar mitzvah, right? There you go.
All right, buddy.
All right, so anyway, what you may not
laugh though, right? It's good to laugh.
Dale, can I jump in here for a minute? Thank you.
Yeah, go ahead, man.
So what your folks may not know is that Mr. Gann was an astrologer. He didn't publicize that. He kept it under the radar because back in his day, he was worried that the guy in the white coats would come and take him away. If they found out he was doing astrology. But that's it. I talked to Gann, one of Gann's partners, a guy I worked with him for 10 years, and the partner said that Gann first and foremost was astrological. Okay, so this isn't totally crazy what I'm doing here, and I can prove that this stuff works. And if you sign up for my free class, which I'll tell you about later, I'll show you all my numbers going back a couple of years if you want. I've been doing this a long time, but there's only so many hours in a day, so you probably don't need to look more. See more than 2 years of numbers, All right, here we go. So one of my top things of all the things I look at, astrologically speaking, are due to the relative motion of the Earth to the other planets. We're all going around the sun at different speeds, and just like when you're driving on the highway and say you're doing 60 miles an hour, you look at your speedometer and it says, for example, it says, "Hey Dale, you're going 60 miles an hour on your speedometer there." And then Dale looks out his side window, and all of a sudden he has the impression he's going backwards. What happened? A car passed him. And so Einstein would tell you everything is relative. Okay? And so we know that looking down at the solar system, the planets are doing this, but relative to the Earth, they are. And Einstein would tell you that that's important because when different bodies change their relative position, it changes the energy field. This is all according to Einstein. Einstein was a pretty smart guy, so you might want to pay attention to him, So what we have in astrology is if you were to go out in the night sky every night and plot the planets individually, you would notice that once in a while a planet looks like it stopped its normal motion and then it reverses its direction. When it stops its motion, that's called a station point. And that's only momentary, and then it reverses its direction, so it may be going forward. That's called direct, and then it turns to go retrograde. When the planet stops its motion, that's one of my top things for a change in trend in the markets. So here's your principle. When the planets change trend, the markets change trend, okay? The other thing that's right up there with the station point is as the planets go around the sun, like horses on a carousel, they go round and round, but they also go up and down. They oscillate. Most of the planets oscillate in a band of about 5 degrees north to 5 degrees south. When they get to that 0 point, that's like a balance point and an energy point. That causes there's a shock wave, an energy wave that goes through the solar system, and that can also bring a change in trend to the markets, okay? Having said that, now let's look at what's happening. We got a big cluster of events over the next few days. So this, starting this afternoon, we have Venus in the sign of Scorpio. Excuse me, I need to get a drink of water. Sorry, hold on. Excuse me. So Venus in Scorpio turning retrograde. So we want to watch the markets that are associated with either Venus or the sign Scorpio. So you want to watch what, and the way to make money on this is with a high batting average is you want it, these, I'm going to give you like a shopping list. You can't do this blindly. You have to go look at that market and see if it's at an extreme. At the top of its trading range, the bottom of its trading range, or some very oversold. The bigger the extreme, the better. And then there's about a 75% chance that market will reverse and you can get a very nice trade there. So here's your shopping list for the Venus turning retrograde in Scorpio. You got your cattle, cocoa, cotton, hogs, stocks, sugar, tea, bonds, and wheat. We'll be looking at the charts here in just a minute. Mercury has to do with mostly with the grains, and the stock market is the big basket of everything. So if anything important is happening, that can affect the stock market, okay? Then we have another important thing happening this weekend. Looking at the solar system from the point of view of the sun, that's called heliocentric. We're going to learn some Greek today. Helios in Greek is sun. We also have the other system we look at is geocentric. Geo is Earth. So we have the Earth geocentric system from the point of view of the Earth and heliocentric from the point of view of the sun. And so now Jupiter takes 11.5 years to go all the way around the sun. There's 12 signs in the zodiac. We divide the sky up into 12 equal parts. And so about once a year, Jupiter changes signs. When it changes signs, we get a bit of a shift in the economy and in your different markets. And so now we want to be looking at corn. Nobody trades the commodity index, but just generally the commodities, inflation related things, oats, oil, and stocks. Then we're going to have, then Monday night, we're going to have a new moon in the sign of Libra. Now, most new moons and full moons tend to have a general effect on the markets, and particularly grains, precious metals, and financials. In this case, because it's in the sign of Libra, you want to be watching sugar and wheat. Now, when I say financials, your people, Dale, are going to be interested to know that the new moons and full moons correlate very nicely with the currencies. And if they haven't been doing that, I'm going to show you some life-changing stuff that's going to make their lives and their trading so much easier and much, much better. So anyway, I put the charts up here now. There's your cat. We're going to go through the shopping list now. Here's the charts. There's your cattle. All these charts are as of last night. There's your cattle on a little pullback here to the bottom of its possible range. You want to look at this probably late today or an early Monday to see where it's at. It's possible it could break the bottom of the trading range there for the cattle, and that would give you a whole different look. But if it got really oversold, then you might want to buy it anyway. Or if it rallies back to the top, then you look to go short. One of the beautiful things about this system is that, like I said, about 75% of the time it's going to reverse. About 15% of the time you're going to get an acceleration So you have to use stops. If you're really aggressive, you can stop and reverse. And then, of course, there's maybe 10% of the time it's just wrong and it doesn't work. Believe it or not, this is not a perfect system. I know it's shocking. All right, there we go. Cocoa. There we go. Cocoa has been going down, down, down. This is the kind of thing we like to see. So you have a possible bottom forming here. The cocoa would like to see the cocoa get one more little push down here today. That would be really nice, Here's your cotton. The cotton's been going down, down, down too. It's kind of scraping bottom. If you got the cotton to get a little push down here into the end of the day, that would be a beautiful thing. Hogs we're going up, 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 and now they're in a pullback low, possible pullback low. So there you go. Here's your S&P. Had the big whack yesterday and broke the its uptrend, the term uptrend line. You need to see where it's going to establish a new support level here, to maybe possibly today or by Monday. Probably going to get a reversal in the S&P. Probably I'm going to guess Monday, because the stock market likes the moons too, So it's probably going to get pulled to Monday is my guess. Here's your sugar. Sugar's been going up, up, up. Looks like this might be setting up for a possible short-term top. If we get one more little surge on the sugar into the end of the today, that would be ideal. Here we go. Bonds obviously got whacked here in the last couple of days. That sort of precipitated the big down in the stock market. And it looks like this might be getting near some kind of short-term low here in the bonds. Also got another method called fractals. I'll teach you that when you get my free class. Sort of a longer-term forecast model that says that the bonds are due for some kind of bounce here over several weeks. So we could be getting to a nearer low here, and of course you watch the currency traders watch the interest rates. That's seems to be kind of an important factor there with your currencies. So that might be instructive. We'll be looking at the currencies here at the end of these charts. Here's your wheat. The wheat is not being helpful right now, but we'll see where it happens today. It's kind of in a narrow range here and smack right in the middle of the range. You might remember the band Steely Dan, Dale, they had the hit song Stuck in the Middle. That's what wheat is, There you
Love
go.
That,
I thought you liked the musical reference,
Yeah,
all right, here we go. We got corn. What's that, Dale?
Love Steely Dan.
Anyway, corn's been rallying here, and the grains. If you don't want to use your brains, trade the grains. Most of the time, it works really well. And so the corn has kind of been going up, but kind of flattening out here. So we need to see some kind of extreme here by Monday on these grains, because it'll be a new moon. Same thing here with the beans. Beans are pulling back to the bottom of their range. And here's your oil. Oil had made kind of maybe a short-term top here a day or two ago, and now it's pulled back a little bit. We want to see by Monday, all these markets you're going to see sort of across the board a high number of markets all reversing by Monday, no later than Tuesday morning, because we got the full moon acting as a precipitator for this huge cluster of planetary activity. It's like lighting a keg of dynamite, right? The moon is kind of sort of a spark, It's going to light the keg, and then you're going to get a big change in trend for many of these markets. Here's your gold going sideways in a narrow range, and it's near the top of its range. So if you get the gold to go back up to the top there, that's a possible short. Here's the silver kind of doing a little different thing. There's kind of an expanding channel here, and it's kind of pulling back toward the bottom of its range. So we just want to see a similar extreme. The bigger the extreme, the better over the next 1 to 2 days, trading days. Here's your dollar. Now let me show you something that's going to change your life. Well, I got these dates here. Look at this. Just take 10 minutes. I'm going to show you a couple. And if we're all done here, take 10 minutes and you can Google it. Go get the new moon and full moon dates. You ask for a lunar calendar for 2018, you'll get the dates, and you'll see that within a day or so of the new moon or full moon, these currencies are turning. So, here you go. Here was the 24th. There you go, September 24th. That was a full moon. There's the dollar making a low. Next, back 2 weeks before that, you had that was a new moon, and it was making right. Oh, I think it was the 11th, right there. That little top there, that was a new moon. All right, then you go back a couple weeks before that, and you're August 24th, I believe. That was a low, and it goes on and on. You know, you look at the moon. You'll have to, won't have to do you won't have to do all those oscillators and moving averages. You can throw them out. You won't have to do Elliott wave and keep recounting your waves. You just wait for the market to get to an extreme at these key points, and then the market's probably going to reverse. It's very, very simple. Okay? Here's your euro doing just the opposite of what the dollar does. There you go on the 24th of August. It made a beautiful top. There you go, or the 11th of September. It made a low. What more do you need? That's it. It's easy. Right? It's simple. And the great thing about this is you can plan your vacations, or you want to go play golf or go to the beach or whatever. You know when you need to be at the market and be here, and you know when you don't have to be there. Okay, the planets will tell you when you need to look at the markets. So there we go. Do you take questions from your audience there, Dale? How's that work?
Yeah, I do. Looks like you're correct about
questions.
They're thinking that Forex Gal would like to know. It looks like the S&Ps are turning today. Do you see a drop coming in the S&Ps?
Well, I'm looking for an extreme by Monday. So,
okay. All right. I think Forex Gal. She said this Norm guy is a wizard. So why don't you tell? Well, why don't you tell her how to get a hold of you, and at least you could take your free course and check it out.
Right. I hope Forex Girl contacts me. I'll be looking forward to meeting Forex Girl. She obviously is a very good judge of character. She thinks I'm a wizard, right?
Yeah.
That's a little.
I think you're very good. I think you're very good.
Thank you. Thank you very much. I do.
I wouldn't have you.
I'll tell you.
You do Elvis? You do Elvis?
Thank you very much. Yeah.
Oh, I see.
Thank you.
Yeah. All right. Okay.
All right. Anyway, I got. What's that again?
I could sing like him.
There you go. I also do President Nixon. President Nixon famously said at the top of the market 2 days before the top, on his birthday was January 9th, held a press conference and told everybody, if I weren't president, I'd be buying stocks. All Americans should buy stocks. And then the market topped out, and we went into the worst bear market since the 30s.
Huh. Okay. Yeah, that's interesting.
All right. So anyway, I've been doing this since I was a teenager. I'm 67 now, so that's over 50 years. And then when in college, I was investing. I successfully made money investing in college. And then I took that money and I stumbled on the opportunity to buy a membership in 1975 on the fledgling new exchange called the Chicago Board Options Exchange. And I ended up right out of school going there and becoming a market maker on the floor there, and did that for 12 years. Also traded on the Chicago Board of Trade. And so I had some fun there, and a bit of luck. I was able to survive there 12 years. I watched many people come and go. Not everybody was as fortunate as I was. I only went there because I'd studied astrology and correlated with the markets when I was in college and made money that way. Made some serious money that way. All right, so you can all learn about what
I have a suggestion, to capture the younger audience, and some of the millennials, they do want to learn how to trade, but they have a big interest in crypto. Maybe some coverage. Have you ever looked at? Maybe there's not enough history of Bitcoin.
You know what? In my letter, I got 30 different items. We got plenty of ways to make or lose money in my letter. I don't need to don't need to go there.
Bitcoin. All right. Okay. I agree. I'm just saying there's
I don't need to get
a lot of interest in it.
Don't need to get in some exotic vehicle that, you think, oh, I got so much money in this crypto account. You wake up the next morning and it's gone, You've heard those stories, haven't you, Dale? Right? Your money's gone overnight. So there you go. You're not going to have that
unregulated.
What's that?
That's true. Very good point. Very good point. Unregulated crypto.
Right. The futures markets have been around. I think the Board of Trade started futures in the United States in 1849,
Yeah. Was a good year.
So anyway, I've been doing this a long time, got a floor experience. It's always was studying the markets. You'd be surprised how many of my former colleagues, I'm on the CBOE alumni group there on Facebook. Almost none of those people are still in the markets. I was shocked. I guess they didn't learn anything while they were there, because they're all off doing other stuff. I'm still doing this. I love this stuff. And why do the sheep go this way or that way? And I think I got a pretty good handle on it. So I'm going to teach you you get my letter for free. You get a 6-hour one-on-one class on Skype. And I'm going to teach you what's in my letter and the different forecasting methods I do. And I can show you that I have about a 75% batting average on all these markets. If you like day trading, I can teach you how to day trade with a high batting average too. I got one new student who started with $3,000 in mid-June, and he's now got his account over 20. So that's a trade one contract. So that's pretty good.
That's phenomenal. Before I let you go, Norm, what was that Helios event? It was Jupiter.
Jupiter changing signs. This weekend, okay. Jupiter's going to heliocentrically from the point of view of the sun. Jupiter's going to change signs. Going to leave Scorpio, go into Sagittarius. Okay.
Thank you.
Sagittarius has to do with international affairs, study, higher learning, and things like that. And then it's connected to commodities like oats that nobody trades, but it's also harmonically related to corn and whatever else I had there on the list.
Okay, it leaves Scorpio and moves into what?
Sagittarius.
Okay, I got it. That's going to be the tagline on your interview. All right, Normal. It was great. It was great having you. Great to talk to you.
So,
so
I don't know if I need to put this on.
Give it a shot. Huh?
I don't know if I need to put this on the audio track or not, but my contact info is there on the screen. And please contact me. My name's Norm Winski. I'm in sunny Naples, Florida, USA. There's my phone number, 239-594-3939. Feel free to contact me by email if you like. And Winski at embark.mail.com. Or you can Skype me at norm.winski. Looking forward to helping some of your folks, Dale.
Okay, the one and only Norm Winski. There's his information. I encourage you guys to give it a call. It's going to become a lost art. So learn from Norm. And thank you, everybody. Thank you, Norm. Everyone have a great weekend. Dollar continues the weekend again. I think that some of Norm's turning points might actually, maybe we're getting a little bit of foreshadowing today. So that's it. Remember, don't just count your pips, count your blessings. Have a great weekend, everybody. You're welcome, Marius. You're welcome. And I'll see you guys on Monday. Thanks again, Norm. Great hearing you. And happy what?
Happy full moon, everybody. Hope to contact me right away.
Is it a full or a new? Full or new?
This will be a new moon.
Okay, happy new moon then.
Right up.
Okay.
So I hope everybody contacts me right away because I only do these free classes for a few days in the beginning of each month, and I'm probably going to end them here by about Tuesday. So contact me right away.
All right, Norm. Have a great weekend. Adios, everyone.
You too.